Hey everyone, this is Jeff, Swing Trade Warrior with DayTradeWarrior.com. Here with our weekly video recap of the closed trades from the past week. This week was a good week. Between day trading and swing trading, we locked up about $14,000. And so we're going to go over some of those trades from this week and talk a little bit more about them. If you go to DayTradeWarrior.com, you can see both the day trading and swing trading performance blotters on the website and keep track of all our open trades, and we alert our stops and our entries and our profit targets, and you can see some of the past trades from the last few weeks. Overall, the portfolio for swings since we started a few weeks ago is up about $12,000, and we're hovering around an 85% win rate. So without further ado, let's get into some of those trades that we took. One of them we've been in for a while was SSYS. Now this was right out of our options gap fill strategy that we use. So back on February 3rd, SSYS gapped down on lowered guidance and weak earnings projection, and they dropped about 25 points that day. It was a pretty significant drop. Now, knowing what we know about how gap fills work and using our gap fill strategy, we know that a large percentage of the time, stocks that gap down this significantly are going to make an effort to fill the gap here. And so we waited for an entry opportunity once the lows were rejected on that day of the gap down, and we bought ourselves a call position in SSYS. And we entered the trade on February 3rd. And like I thought, the trade cooperated quite well, and over the course of the next, well, I guess it's the next week and a half or so, SSYS made moves to fill the gap. So we were in at about $55, $56, and the trade ended up, we ended up closing it out with 100% winner on our call options back on, let's see, right about here, when it hit $65, $66 is when we got our 100%. And we ended up realizing 100% on this trade in 1, 2, 3, 4, 5, 6, 7 days. It was never against us at any point, so this was the perfect trade. It could go higher. There's still another $15, $20 until the gap gets filled here, or $10, $15 till the gap gets filled. Whether or not it goes all the way, I don't know. Out of the trade now, we took our profits at 100%. I know it went up a little bit after we got out, but that's fine. It just tells me that we were seeing the ball well, and we picked a good trade. One of the things that we're going to talk about in our new swing trading course, it's going to cover options and all of my swing trading strategies, and how I identify trades like this, and how I negotiate entries and exits and manage risk once in the trades, and also why we use options versus long stock, and many other things that are applicable to finding winners such as this. So let's look at the next trade. The next trade we took was on Marathon Petroleum, ticker MPC. This trade has a ton of potential. This stock has a ton of potential. Look at the daily chart here. In the past few weeks, we've seen a ridiculous move after their earnings. They hit a low back on January 15th around $75, and it's trading at $103 right now inside of 2 weeks. So that is an incredible reversal and breakout off of good earnings. We blasted through the moving averages here, and now we're trading at $103 on this stock. If you look on the daily historically, this is how I found the trade. I was looking for stocks that were accumulating below a breakout level, and I have a scanner that helps me to find stocks like that. The MPC is an oil play. It's sympathy to oil, and so with oil reversing, the opportunity to get in oil stocks at key breakout levels is prime. So we took this. If you zoom out a little bit here, okay. We have this huge top right here at about $98. We have another lower top at 92, and then maybe a smaller one here at 94. I wasn't alerted to this trade until it was trading between $94 and $98, just under the $94, $95 little flat top, double top that we have. So what happened was when I looked at this chart, I looked at the daily, and for the past 2 weeks, I mean, this thing's had one, two, three red candles. Last 3 weeks, it's only had 3 red candles. So to me, personally, that looks like an overextended chart. However, combined with the news, their strong earnings, and the reversal in oil at this key level, I believe that this could potentially be a continuation breakout. So looking at this top here, what I wanted to see was this break $98 and hold. That was the first thing that needed to happen in order for me to have confidence in this trade. So I took a small position as these candles are pretty big here on the daily, has a rather high ATR, and it definitely is more volatile and extended. So I took a small starter position. When we broke $98, I got long at $98.04, and the next key level that I wanted to see break was at $100. And a couple days after we got into the trade, we tested the $100 level, and I doubled my position over $100 for an average of around 99. My average was 99.04. And the next thing that I wanted to see happen was the $100 level hold, and that's exactly what we got. We ended up, zoom in here, we ended up testing $103 with an average from 99. We had 4 points on this trade at one point. However, we took profits on one of these days when, let's see, when did we get out of this? We were out of this on the third day after we tested the 102.50 level. When it pulled back, ended up exiting with a profit stop on a day that the S&P had come in midday. There was some news out of Greece, and oil inventories were released, and they were less than favorable since we're still in a surplus for oil, and crude pulled back a little bit, and Marathon started pulling back as well. Knowing how extended this was and how quickly it could sell off after just breaking this level, after being so overextended, I exited the position with a couple points. We took about $1,000 on this. It was a small position, only 400 shares, but we ended up locking in a nice winner on it. I believe from this point forward, if we can flag and consolidate above 100, we're going to see a continued breakout. And the sky is the limit. As oil reverses, this is already as high as the stock has been in years. So we're making new all-time highs, and excited about re-entering this trade after some consolidation and confirmation of the oil reversal. The next trade I want to talk about is Apple. Apple had monster earnings a few weeks ago and put in a massive gap up, and they put in a massive gap up after their earnings, and what I was waiting for was an accumulation phase, and to be able to see if Apple could hold the gap after the earnings. And as strong as their numbers were, there's no way it wasn't going to hold the gap. So the day after earnings, we took a small starter position of 250 shares, right around the 117 level, and I knew that the 119.75 had been the recent high. And I knew that once we tested that level, there was going to be stiff resistance, and we could end up, taking a few days to try and punch through that level. So we got long after earnings at 117. My stop was going to be break of the gap. So under 115, we would start to fill the gap, and I would have bailed on this position. But it held up despite the volatility between that 120 level and the 115 gap level. And so I let it work. And we gave it a week and a half, and finally we broke the 120 level and hit 120.51 after testing the 120 level on February 4th. The next thing I wanted to see was that trade hold up. So I doubled over 120. We ended up with 500 shares and an average of 118.90 or 118.89. And so we had a great average going into a potential breakout, and that's what we ended up seeing. After the 120 level had fallen, the sellers were out, and people started buying Apple again, and we got lucky with some news that came out about some things that Apple's working on, and so we ended up seeing a lot of buying over the next few days. And Apple has this breakout pattern here where they started going parabolic, and ended up with a new high of 127, about 127.50, 127.48. We scaled into the trade. We were long at an average of just about 119, and I took half my profits at 123.50 on a day that the S&P was down, but Apple was up. Now, Apple traditionally trades a lot closer with the indexes than some other stocks, so I was concerned when news hit This is the same day that Marathon Petroleum started pulling back with that oil news, and the S&P came in hard. We ended up getting a recovery at the end of the day, but I wanted to take my profits early in the morning when we were pushing through the 123.50 level to lock up 4 points on the trade. We hit new highs that day at about 125, and that's just about where it closed at. Intraday, the stock came down and tested that 123.50 level where I had my first sell at. So I ended up bailing on the trade out of concern of market weakness and because we're seeing a little bit of extension here on the daily chart, and we're in uncharted territory for Apple. So, I don't know how long this can go on, making new highs every day for. I'm a little bummed we got out of the trade as early as we did. I was concerned. I've had a couple trades go against me this year as a result of market weakness, and so Apple is top heavy as it is. I did not want to lose my profits on that, so I locked them in. It was about a $2,400 winner, and I'm happy with that. We wanted to get back in under 125, but what I wanted to see was consolidation under this 125 level, but you can see we just kept ripping up. So what I'm thinking is we might see consolidation now that we have two tops here at 127.50. We might see consolidation under 130 before Apple makes its next leg up. There was a couple of upgrades and some price targets released for Apple, and both of them are much closer to $200 than they are $100. And so I think Apple, with its story, with its strength, and with a favorable market, it can put in another 10-15 points before we see a big pullback. So what I want to see before I buy here, I don't want to chase it, I don't want to buy the top, I want to see it consolidate either under 125 or 130, and I'll do what I did last time. I'll take another starter position, wait for it to flag out, and wait for the breakout. This trade is a strategy that I call a breakout with a catalyst. It's very typical of the types of trades I alert. We have a test of a key resistance area. We have some flagging, multiple tests of it. We have solid earnings, catalyst behind us, and so it's just a matter of time, before market conditions favor a breakout. And we ended up getting it, nailed the trade. If you stayed in this trade from entry until now, this is nearly a 10-point winner. We ended up with 5.5 points on the trade. Like I said, I bailed on market weakness and I wanted to take my profits, but definitely kicking myself for leaving 5 points on the table here. But you never know what's going to happen tomorrow, so you got to take what you have when you have it. Never forget to pay yourself. You will never go broke taking profits. One of the other trades I wanted to look at was on our watch list. TripAdvisor, Trip. I like the story on TripAdvisor. I've traded TripAdvisor before, and they came out with a monstrous beat on their earnings as well. And we saw an enormous gap up of about 17, 18 points between February 11th and February 13th. This trade was on the watch list for February 12th, and we wanted to get an entry at $77 for a long position. And what ended up happening that morning was our chat room ended up day trading it, because after this earnings, the buying was so volatile in the morning and the volume was so high. It finished with a little over 12 million shares on the day, and it averages around 2 or 3 million. The volume after that earnings was so volatile that I felt that it would have been a better day trade, as it was going to move a lot quicker and a lot faster. However, it was on the watch list for swing trading with an entry at $77. Now, if you pull up the 5-minute chart and we go back to that day, let's see here. We entered this trade in the chat room at about $78. I missed my long entry in the morning for a swing. Ended up not alerting it because we were day trading it. Took an entry at $78, and I filled 1,000 shares. And we instantly realized 2.5 points from our entry that same morning within minutes. This is a 5-minute chart, just to give you an idea of kind of the trend for the day. What happened was we hit a high of right around, what was this, about 80.50, and we sold off and we came back down to 78.39. At this point, I believed that the trade was strong enough that it was going to run the rest of the day. So this first pullback didn't really concern me. It never came close to my entry or tested my entry. So I gave it room, and I wanted to let it run. And the market was strong that day. So what ended up happening is we kept ripping up until we hit a high on the day of 84.70. So once I was 3 points, 4 points up on this trade, I started trailing my stop about $1.50 away just to give it room for these little pullbacks here. And what you notice after it put in 4 or 5 green candles, it put in 1 or 2 red candles, but it would never make new lows. So while it would sell off, people would take their profits, the buyers would come right back in and buy every one of these dips. I held all the way up until we tested $84 a couple times, and the next time it failed, I moved my stop up to 83 to give it room the rest of the day. Where's 83 at? Right about here. We ended up breaking $83. I stopped out on the trade midday, and it was after that it sold off. And I locked up 5 points on the trade, so it was a $5,003 winner in about 3 or 4 hours, about 4 hours. The next day continued up. The move wasn't as volatile and it wasn't as drastic, but we ended up getting to about 85, just under $85. And so while this would have been a good swing trade and it was on the watch list, if you took some, it was impossible for you to lose money if you got the entry either from the day traders in our chat room or you got the entry from the swing trade watch list, and you'd still be in this trade and up about 6 points right now. I took profits on the pullback. I didn't want to hold it overnight as it was very extended, and the move up was pretty sharp. So I was more than happy to lock up the $5 grand and look for other trades. Some of the other trades I took this week off the watch list were FireEye. Was another hot earnings winner. This ended up being a quick intraday scalp for me. It's extended, it kept gapping up, got nice support of the 200 moving average at $37. This has a lot of range. I ended up just day trading this, not swing trading it. Made money on that, made money on TDC, was another swing trade alert that we got about a point on. So there were definitely a lot of trades last week as the market put in a very strong week, making new highs. We had a lot of good trades both in the chat room and for swing trading. Like I said, it was about a $14,000 week, so it was a good week. It's a good week for the portfolio. We're still long a few trades. We doubled positions on that are open, and hopefully we'll be closing those out next week for some nice winners, and I'll put those in next week's video recap. If you're interested in swing trading with us or knowing more about the Day Trade Warrior community, go to daytradewarrior.com. You can do a 7-day free trial. No credit card required, no money down or anything like that. Just check us out for 7 days and see if you like how we do things. We recently released our first swing trade and options education course. I'll be running that starting February 23rd. Here's what that page looks like. We'll be running that starting February 23rd. The first 10 seats get a 25% discount on the course. There's 5 seats remaining right now. We only released it at the end of last week, so it's filling up quickly. It's going to be a great course. It's 5 days, every day or an hour after the market closes, and we're going to cover a ton of material, including introduction to swing trading and options, swing trading strategies and the patterns that I look for, risk management, volatility, and how to choose the right stocks for swing trading. We're going to go over fundamental and technical analysis, show you what to look for and how to read certain SEC filings and how to apply them to trades. And also what we're going to do is we're going to give away a free copy of my swing trade scanners. We sell my trade idea scanners in the store in our scanner store for about $1,000, but everybody who takes the course, we're going to give those away free too. So you can see what I set my scan filters to look for when evaluating swing trades. They're a combination of technical and fundamental scanners that look for accumulation and certain relative volume, moving average breakout type setups. So they are producing about 85% wins for us so far this year, and we're really happy with their performance. So everybody gets a free copy of those. And we're going to go over recent trades and how I build a watch list. And so we're going to cover a ton of things. Like I said, it's 5 days a week for an hour every day, 4 to 5 Eastern time when the market's closed. So if you're interested in that, you can check it out at daytradewarrior.com and click on the education courses tab. If you're interested in learning how we trade and you're interested in trading with us, you can go to daytradewarrior.com and click on the 7-day free trial link. If you have any questions, I'll put my contact information down in the description of this video. And you can email me, Jeff@swingtradewarrior.com. Other than that, hope everybody has a great 3-day weekend, and we'll see you next week.